Good morning to all traders. Why don't we go ahead and start with the S&P this week? The pattern is becoming more interesting, more complicated, harder to predict, while at the same time NFP seems to be boosting the equities up while the dollar is falling because it's losing some of its safe haven qualities. Following, of course, that last Friday's news that China is now saying phase 1 of the US/China deal is agreed in principle. It will be a very interesting week to watch again, and while the US earnings actually keep coming out, keep released. We also have the Bank of England interest rate decision, and tomorrow the RBA. Are we going to see risk continuing and moving equities to the upside, or are we going to see some sort of exhaustion, let's say? Well, from a technical perspective, indicators seem to suggest that there is some sort of strength on the S&P, but momentum is weakening, okay? Now, and when compared to our original view, or the view that we have been talking for a while now, I'm still standing with the same sort of projection, same outlook. It's just that I now extended this move. I'm looking at this as an A, B, and a C, okay, with a complex combination here, of course. This is pretty much the same pattern, right? I was looking at this becoming 1 and 2 before, of course, we had this move to the upside. Now I've just moved this move to the downside, a little bit forward to the right, which makes me think after this 3 combination, which is we'll have wave B up here, we're going to see prices to correct lower to around 26.15. Now, that is following my previous projection and just pretty much giving it a bit of time to turn as we expected. The other scenario, of course, because there is quite a few, but I will just talk about one that is very possible. As you can see, this looks like it's a triangle itself, right? So what we could have here is we could have a 1, 2, 3, 4, and 5 that is going to end around 3000 or so and then start moving lower. So that would mean that either we're going to have a 3 over here, okay, prices will go low and then up. So we're looking at wave 5 potentially going up to 3200s. Or this, of course, could be a 3 over here, and then we would have 1, 2, 3, 4, and 5. But I'm not sure that is likely to be the case. Nevertheless, we're here to discuss and provide different scenarios and the ones that are more likely to weigh on prices. In the short term, and since we took out those break-even stops and we reached a new all-time high, I see, because the MACD and RSI also show us that, I see some sort of short-term pressure on the S&P. Now, on the US index, there's not much that actually has changed. According to our view, we are looking very good. Okay, we ended wave 5 up here, and we're looking 1, 2, 3, 4, and 5. Last week, when we watched this, we were actually moving lower down here. We had a very good completion of wave 3, then wave 4, and we're looking at wave 5. Now, of course, this wave 5 could be an impulsive move to the downside, right? Or it could even be an ending triangle, which is most likely to create a fresh high here, right? We should have something like that with prices ending around 96.50 or so. Then we should be getting an intermediate correction too, and then prices should be moving further down. So for the week, this is it pretty much. Just pay attention that I've drawn 2 very good divergence arrows here on the MACD and RSI. So we could be expecting prices to potentially just move a little bit lower and then move up. So we cannot be still sure how big wave 5 is going to be, but we can expect it to be actually forming anywhere below the low of wave 3 and even finishing here, or that could be fresh wave 3, then 4 and 5 again. We never know with wave 5 what is going to happen, but of course further signs are going to be revealed in the near future.